The House Republican proposal for a short-term extension of the debt limit sent stocks soaring yesterday. The Dow jumped 332 points, its biggest one-day gain since December of 2011. Michael Santoli is senior columnist at Yahoo Finance. Welcome.
Thank you.
So what is it that is sending stocks soaring?
It was that removal of the debt ceiling as the main front in this war, because that was always considered to be the thing that would be the cataclysm, or at least the unknowable.
Wall Street always
problem.
always believed it was inconceivable, but now
Exactly.
they're more comfortable with their belief.
Exactly, and not only that, I mean, yesterday what we did was take back in one big bite the kind of grinding losses that had built up in October as this wound on. So it's not as if the market is saying, well, it'll be smooth from here, but just that we've kind of taken that big risk off the table. By the way, traders also remember every time we got one of these last-minute resolutions in January and then in 2011, the market just took off with a relief rally. So they were almost anticipating that.
Yeah, but what are they thinking, Michael, if they delay it till November 1st? It's sort of, as they just said in the piece, a kick the can kind of routine. What will that do to the confidence of investors?
I think it won't matter because they will defer. Well, it'll matter eventually, but they'll defer their anxiety until it gets closer. Because right now, I don't think Wall Street's not particularly comfortable trying to handicap whether this is a gesture and rhetoric by one side or the other, or if it's actually negotiation. So they wait until it's really deadline time to worry about it.
The other aspect of this is how other financial centers around the world looking at how the United States is handling this.
Exactly. And it makes very little sense probably in the rest of the world. No other countries, one other country has a debt ceiling.
They can't understand why we have a debt ceiling in the first place.
Exactly. It's a kind of a historical vestige. Right?
But when they look at the way our government's having a hard time reaching a decision, does it somehow lower their confidence in our ability to get beyond this in the years ahead?
You know, it might, but it's not really being evident in the ways you would think it would manifest itself in the markets. I mean, the Treasury securities are the water in the world's financial plumbing.
But they clearly understand the impact of a default, if it would happen, would have catastrophic consequences for them as well.
Without a doubt. I mean, and that's why nobody really wanted to even consider the likelihood of that.
Okay.
And what will they do about that? My son lives in China and said that people are saying to him on the street, what is wrong with your government? Why can't they reach a deal?
It makes little sense, obviously. But, you know, interestingly enough, you know, we've had this kind of dysfunction down there for a long time, these kind of very short-term patches instead of solutions. And yet the economy's grown better than the rest of the developed world, and our markets have done better. So it's almost as if once government gets out of the way with one of these short-term deals, it's been a decent picture.
You feeling encouraged today?
Encouraged for the moment, but, you know, we've had a big up year already on the market. So it's not as if, you know, we've suffered.
All right. Michael Santoli, we thank you.